175 Wesch 8, Part 4. We're continuing. The point of talking about the world systems theory um, is that uh, development does not work. Um, and it's not because there's an outright conspiracy to make the rich richer and the poor poorer. It is a constituent feature of the system. It is not a bug, uh, it's a feature. Um, to maintain the international division of labor. It's just how capitalism works. It's one of the things that it's just the system works like this. But this is we know this. This is what we're here in college to do, right? We're here in college. We're working in secondary. You working in a factory or something like that, or your parents did or grandparents did, and you're in lower level services and you're trying to get more education so that your labor can be more valuable. That's the goal. Is to invest. It's like you're a capitalist with a factory, and you're trying to invest more money in the factory, make it more efficient, and that's your body. If you remember back to the medieval times when all we have is our labor, if we're cotters, um, all we own is our labor power, and if it's more valuable, then we can improve the social class of us and our descendants. So Gandhi's gambit, the Great Salt March in 1930, was directly opposed to British law forbidding people to collect and sell salt, which is nuts. But that's what they were doing because they're the British, and they don't want Indians cutting in on some monopoly they've handed out to a British company of selling salt. There were 60,000 arrests during the Great Salt March in 1930, but 17 years later, India broke free peacefully. They got away from the British. So, how we make the world, Gandhi followed the anthropological plan of seeing big, seeing small, seeing it all, and living his way into a new way of thinking, truly inspiring. Of course, today it's a little bit more difficult. For example, in Ruschlikon in Switzerland, it's a small town. It's the home of Ivan Glassenberg and 5,000 other people. Um, his income taxes, he makes so much money from his salary at Glencore that his income taxes yield $72,000 in taxes for each of those 5,000 people in his municipal taxes. In contrast, Zambia, which is where Glencore actually mines the copper, they spend 150 million every year. The Zambian people, the taxpayers of Zambia, have to give their electricity to Glencore. They only make 50 million back on taxes from Glencore. Uh, Zambia was a relatively rich country in the 1960s compared to how it is today. But in the 1970s, they ran out of money. Remember talking about Papua New Guinea and what happened when they ran out of money? They went to the World Bank and the IMF with their conditions of what they were going to ask Papua New Guinean to do. Zambians, the same thing. The Zambians went, they had a credit crunch, they ran out of cash because of inflation with the fuel prices and all. Remember the oil crisis of 1973? It hurt poor countries tremendously. So they just ran out of money. They had no money to buy oil. And so they went to the World Bank and the IMF. They said, hey, we need like $1 billion or whatever it was in the day. Um, and the IMF said, okay, if you're gonna ask for that kind of money, we need concessions from you. You're gonna have to sell off your socialists. You socialists with your government-owned mining company, you're gonna have to sell it off. So they sold it off to Glencore, this Swiss company, who bought it for a song, and because it was operated at a great benefit to the Zambian people, with all the profits going back to the government of Zambia and being redistributed back to the people, then Glencore made a fortune because they got to transfer all that cash out that used to stay in country, transfer it to Switzerland. So Glencore, how it does this is it practices transfer pricing. So its Zambian subsidiary sells the copper to its Swiss subsidiary at an artificially low price. A pound of copper is only like 30 cents. They sell it, and oh well, now we're going to sell it at the ordinary price at $10, a pound or whatever. Um, and Switzerland has very very low corporate taxes, so they make a huge fortune. Um, and Switzerland legally exports the copper, even though it never actually reached Switzerland. It just the money landed in the accounts of the Swiss-based company, and so they could claim that they were exporting copper. And that's just how the world works. The rich get richer and the poor get poorer due to capitalism. The system is stacked against the poor countries. Structural power and commodity chains. History of a commodity. We have a wool suit that says made in Canada, but it actually starts in Tasmania, Australia, where people used to live. Indigenous people used to live in Tasmania, but in the 19th century they had genocide. They declared Australian natives non-human. We'll come to that later. And so the people were just basically slaughtered wholesale. Um, the wool is harvested from to clear land for the sheep. So they have these huge sheep farms there now. The wool is carded and spun in Amritsar, India, at $3 a day. The shoulder pads are made in Korea. The lining is made in China. The buttons are made in Canada. The parts are compiled in Germany and sewn together in Russia at $2 a day. But somehow it gets its made in Canada tag. Who demands such exploitation? Are the customers demanding that? The customers don't even know that their clothes cost so much to the people producing them. The customers aren't demanding exploitation. The CEOs, CEOs are actually hired by the board to do the job. We think of CEOs as being bosses, but CEOs are employees just like us. They're there at the shareholders are the ones who have the power in a joint stock company. So the shareholders own shares, and they vote based on how many shares they own. They have a certain percentage of votes, and they appoint a board, and the board gets paid to appoint the executives, and so the chief executive officer, then picks his team or her team and runs the company, hired by the board. So this is called fiduciary responsibility. If you are running a company and you get, let me type that up there. It's always nice to have these words. Fiduciary responsibility. The responsibility of an executive to make sure that the company doesn't go under. So if you have that kind of job and you are hired to make sure the company doesn't go under, and you are presented with an investment opportunity, you have basically two questions. One, is it illegal? Two, will it make more money? So if number one is not illegal and number two will make more money, and you don't do it, then the board is going to call you up and say, wait a minute, you got 4% return this year. You could have gotten 6 if you had done X. And if you say, well, I thought about it, but it was going to hurt people, and I'm just not in the business of hurting people. Okay, you're out, and you get fired. That's what happens. That's the way the world works. If it's not illegal, then there's nothing stopping you from doing it. And often, I mean, this is not always the case, of course, but very often, you disobey the board and you get fired. The board is appointed by the shareholders to increase quarterly yield and share value. If they don't do this, they will be removed. If the board is bad, the voters throw them out and bring in new voters. Shareholders, who are the shareholders? Most shares are held by mutual funds, pension funds, sovereign wealth funds, index tracking funds, corporations, etc. It's not individual billionaires out there pulling the strings for a lot of corporations. A lot of them it is, yeah. An investor or a group of investors will get together and do a hostile takeover, or do some investor activism. But for the most part, it's your own retirement. The people who are running your retirement account, your pension or whatever, your 401k, who are doing this. It is a feature of the system. The power is in the structure itself. So don't go looking for easy answers. There's a problem, and it's not solved easily by laws. It's systemic. Who makes the iPod? We were talking about the iPod, talking about China. You buy an iPod, it's like $1,000 now. An iPhone. It says it's made in China, but it's only assembled in China. The value that is added in China is $4. The other, $296 of that 300 comes is added in a different country. Toshiba has the largest component of the iPhone or the iPod, uh, iPad, whatever. Toshiba had this was it's an article in the New York Times or something back in 2005 or something like that. Um, the biggest component, the hard drive, cost $73, but it was made in the Philippines and China, not Japan. Japan only gets $19 of added value. Apple produced absolutely nothing, actually. The U.S., despite it not being made in the U.S. at all, only $8 of the components were made in the U.S., the chips and screens, etc. Um, it still contributes $163 of that 300, over half the value. Distribution and retail costs, including profit for the retailer. So Walmart or wherever you bought it from gets a big old chunk, and then $80 is pure profit to Apple for designing the thing in the first place. However, even though it says made in China, and $300 of the trade deficit gets attributed or debited to, pardon me, to China, they only end up with actually $4 of value staying in China. Their great the great contribution is cheap labor, cheap and highly skilled and very very active and organized and responsive labor on demand. Okay, stop here.